New data just revealed 25 housing markets across the country where home prices are falling right now. And these aren't small towns nobody's heard of. We're talking Miami, Dallas, Denver, Las Vegas, Orlando. One of these markets has dropped over 11% in a single year alone. We're going to break down all 25, how much each one has dropped, and the one pattern that connects nearly every single one of them. Because if your city fits that pattern, there's a good chance it's next. Now, whether you own a home, you're trying to buy one, or you're thinking about selling, this video is going to change how you look at your local market. Because later in this video, we're going to show you the 3 warning signs that a market is about to show up on this list. And we're also going to show you where prices are actually still climbing and why. So don't go anywhere. Let's get into the data. So here's where we are nationally. According to the latest data from the Zillow Home Value Index, U.S. home prices are up just 0.4% year over year. To put that in perspective, a year ago they were growing at over 2%, so the national market has essentially flatlined. But here's what makes this moment so interesting, and honestly a little scary depending on where you live. When you zoom in from the national number to the local level, the picture splits in 2 completely different directions. Out of the 300 largest housing markets in the country, 99 of them are now seeing prices fall year over year. That's 1 out of every 3 markets in America where your home is worth less today than it was 12 months ago. And on the other side, 201 markets are still going up. Some of them are up significantly. Hartford, Connecticut is sitting 21% above its 2022 peak right now. Meanwhile, Austin, Texas has dropped nearly 28% below its 2022 peak. That is a nearly 50-point gap between the strongest market and the weakest market in the country. I don't think most people realize how wide that gap has gotten. So the question isn't really, is the housing market going up or down? The answer is both, at the same time, depending on where you are. And that's exactly why you need to see this list, because where you live or where you're thinking about buying changes everything about what you should be doing right now. And by the way, if you're already thinking about how this affects your market, do me a favor and hit that notification bell right now. We drop new housing data every single week, and in a market that's moving this fast, finding out 3 days late is basically finding out in a different economy. The bell makes sure you see it first. All right, let's get into the list. All right, let's get into the 25 markets. We're going to break these into 3 tiers based on how steep the declines are, and I'll give you quick context on each one. Let's start with the ones getting hit the hardest. Tier 1, the free fallers, down 5% or more. Number 1 on the list, Punta Gorda, Florida, down 11.23% in the last year. That is a massive decline. If you bought a $400,000 home there a year ago, you've lost almost $45,000 in value on paper. That's not a soft landing, that's a correction. Next, Cape Coral, Fort Myers, Florida, down 8.57%. Northport, Sarasota, Bradenton, Florida, down 6.89%. And already you're probably noticing a theme. Florida is getting hammered. But it's not just Florida. Kahului, Wailuku, Lahaina, Hawaii is down 6.11%. That market is still dealing with the aftermath of the Maui wildfires on top of affordability issues that were already pushing people out. Austin, Round Rock, Georgetown, Texas, down 5.87%. Austin was the hottest market in the country during the pandemic. People were waiving inspections, paying $100,000 over asking, and now it's given back almost all of those gains. This is one of the most dramatic reveals we've seen in any major metro. Naples, Marco Island, Florida, down 5.3%. And then Houma, Thibodaux, Louisiana, down 5.06%. So that's your Tier 1. 7 markets all down more than 5% year over year. 4 of them in Florida, 1 in Texas, 1 in Hawaii, and 1 in Louisiana. Tier 2, the steady bleeders, down 3 to 5%. Now this tier is where it gets really interesting because these aren't just vacation towns or small metros. These are some of the biggest cities in America. Sebastian, Vero Beach, Florida, down 4.2%. Asheville, North Carolina, down 4.17%. Stockton, California, down 4.09%. Tampa, St. Petersburg, Clearwater, Florida, down 4.03%. Tampa is one of the largest metros in the entire Southeast. Millions of people live there, and prices are down 4% in a single year. Miami, Fort Lauderdale, Pompano Beach, Florida, down 3.88%. Think about that for a second. Miami, one of the most talked about real estate markets in the world. International buyers, luxury condos, billions in development, and prices are falling. London, Kentucky, down 3.8%. Lakeland, Winter Haven, Florida, down 3.68%. Dallas, Fort Worth, Arlington, Texas, down 3.59%. Dallas is the fourth largest metro in the United States. This isn't some niche market. This is a major economic hub seeing prices decline. Orlando, Kissimmee, Sanford, Florida, down 3.58%. Port Lucie, Florida, down 3.54%. Deltona, Daytona Beach, Ormond Beach, Florida, down 3.39%. That's your Tier 2, 12 markets, and if you're keeping count, Florida has now shown up in the majority of both tiers. Tier 3, the early warnings, down 2 to 3%. Now, this last group is critical because these are markets that are either going to stabilize from here or they're going to slide deeper into Tier 2 territory over the next 6 to 12 months. Homosassa Springs, Florida, down 3.17%. Denver, Aurora, Lakewood, Colorado, down 3.08%. Denver's been one of the most watched markets in the country. It was one of the first major metros to see inventory explode past pre-pandemic levels, and now prices are reflecting that. Boulder, Colorado, down 2.94%. Palm Bay, Melbourne, Titusville, Florida, down 2.93%. Ocala, Florida, down 2.93%. Vallejo, California, down 2.88%. Las Vegas, Henderson, Paradise, Nevada, down 2.75%. And rounding out the list, Savannah, Georgia, down 2.69%. So there you have it, all 25 markets. And now let's talk about what they all have in common, because this is the part that actually matters for your financial decisions. If you look at this list closely, one pattern jumps off the page. Nearly every single one of these markets shares the same story. They boomed harder than everywhere else during the pandemic, and now they're giving it back. Here's what happened. Between 2020 and 2022, remote work exploded. Millions of people moved from expensive cities in the Northeast and West Coast down to the Sun Belt, Florida, Texas, Arizona, Nevada, Colorado. Demand surged. Prices went through the roof. Builders saw that demand and started building like crazy to keep up. But then two things happened at the same time. First, mortgage rates shot up from 3% to over 7%, which slowed down that migration wave almost overnight. And second, all that new construction started hitting the market right as demand was cooling. So you had a flood of new supply coming online in markets where demand was already pulling back. That is the recipe for falling prices. And here's the thing that made it even worse. Builders don't sit on unsold homes the way regular sellers do. When a builder has 50 finished homes and they need to move them, they cut prices. They offer rate buydowns. They throw in upgrades. And every time a builder drops their price, it pulls down the comps for every resale home in the neighborhood. So if you're trying to sell your existing home in one of these markets, you're not just competing against the other homeowners. You're competing against builders who are willing to take a loss to keep their business moving. That's the pattern. Pandemic boom, overbuilding, rising rates, falling demand, builders undercutting the resale market. And if your city has that same combination, big pandemic price gains, a surge in new construction, and inventory that's now above pre-pandemic 2019 levels, you should be paying very close attention. So let me give you the 3 specific warning signs that tell you whether your market could be heading in this direction. These are the same signals that showed up in every one of these 25 markets before prices started falling. Warning sign number 1, inventory is above pre-pandemic levels. This is the biggest one. If the number of homes for sale in your market right now is higher than it was back in 2019, before the pandemic distorted everything, that tells you the supply-demand balance has shifted toward buyers. Markets like Austin, Tampa, Denver, and most of Florida blew past their 2019 inventory levels months ago. And that's exactly when prices started dropping. If your market is still well below 2019 inventory, you're probably in much better shape. Warning sign number 2, days on market and climbing. When homes start sitting longer, it means buyers have more options and less urgency. Sellers start competing with each other. Price cuts start showing up. This is usually the first thing you'll notice before the actual price data catches up. If homes in your area went from selling in 10 days to sitting for 30, 45, 60 days even, that's a leading indicator. Warning sign number 3, new construction is flooding your market. This is especially true in the Sun Belt. If you drive around your area and you see new subdivisions going up everywhere, model homes on every corner, builder signs offering rate buydowns and closing cost credits, that's supply coming into the market that's going to compete directly with existing homeowners trying to sell. And builders will almost always be willing to go lower than you are. If your market checks all three of those boxes, it doesn't guarantee prices will fall, but it means the conditions are there, and you should be making decisions accordingly. Quick pause. If those three warning signs just made you pull up Zillow and another tab to check your market, you're exactly who this channel is for. Hit subscribe and tap the notification bell so you don't miss the next update, because we promise you, your neighbor who watches HGTV is not tracking this data. Be the smart one on the block. All right, let's keep going. Now, here's the other side of the story, because we don't want anyone walking away from this video thinking the entire housing market is falling apart. It's not. 201 out of the 300 markets are still going up. And there's a clear pattern on that side too. The markets holding up the best right now are concentrated in the Northeast and Midwest. Places like Hartford, Connecticut, Milwaukee, Cleveland, Buffalo, Chicago. These are markets where inventory is still well below pre-pandemic levels. There hasn't been a construction boom. The supply just isn't there, so prices keep grinding higher even in a tough affordability environment. The takeaway is simple. If you're in a market where inventory is still tight and new construction hasn't flooded the area, you're in a much stronger position, whether you're an owner trying to protect your equity or a buyer trying to figure out timing. So let me bring this home with what this actually means for you depending on your situation. If you're a homeowner in one of these 25 markets, this is not the time to panic, but it is the time to be realistic. If you've been thinking about selling, waiting for a spring bounce might not play out the way it has in the past years. The longer you wait in a declining market, the more negotiating power shifts to buyers. Know your numbers, know your local comps, and price competitively from day one. If you're a buyer looking at one of these markets, you have leverage right now that you haven't had in years. You can negotiate. You can ask for closing cost credits. You can push back on price. And honestly, you should be looking hard at new construction because builders are offering deals right now that resale sellers simply can't match. Don't rush, but don't sit on the sidelines forever either, because the data actually suggests the number of declining markets may start shrinking in the coming months as month-over-month prices firm up. If you're a seller in a market that's still climbing, you're in a good position, but don't get overconfident. Price realistically, present your home well, and take strong offers when they come. This market won't stay tight forever. The bottom line is this: the national housing market number doesn't mean anything for your specific situation. What matters is what's happening in your zip code, your neighborhood, your street. And now you know exactly what to look for. If this market intel is helping you make smarter moves, tap that notification bell. We put out new housing data every week, and the people who catch it early, they're the ones making the best decisions. The bell makes sure you see it the moment it drops, not 3 days later when your realtor's already texting you about it. Drop a comment below with your city and state. We'll tell you whether your market is on the rise or showing warning signs. And we'll see you in the next one.